and welcome to the 3Q FY18 earnings conference call of Schneider Electric. From the management side, we have Mr. Prakash Chandrekar, Managing Director of the company, Mr. Arnab Roy, Chief Financial Officer, and Mr. Vineet Jain, Head Investor Relations. May I please request the management to help us with some opening remarks and share the presentation which is shared on the stock exchanges, after which we can open the floor for Q&A session.
Good afternoon, everybody. I am Prakash Chandrekar, Managing Director, Schneider Electric Infrastructure Limited. I am pleased to connect with you to share and update the progress of our company. I will be supported by my CFO, my colleague Arnav. Coming back to the financial side, he will be covering in detail. Quarter 3 of financial year 18 was moderately challenging with positive operational growth, excluding one-off. We have seen the positive results of the project order to cash which we launched during last quarter, which is supporting us, I will say, in current quarter. Further, along with P&L performance, we remain focused to build a healthy backlog with better mix in line with our strategy. Today, we'll present you few slides on market outlook and order to cash project. So let's go to presentation. Slide number 3, which is basically a segment outlook. It is short to medium term. So the first one is the utility segment. Utility segment, the main drivers are some of the funding which is coming from the government side, like IPDS, the smart city, and that is basically to support the utilities to really improve their efficiency in terms of reducing aggregate technical and commercial losses, improve their efficiencies, and that comes through technological intervention like smart grids, distribution management system, self-filling grid, load management. This is where we have expertise, and we have divided this opportunity into 3 parts. If you see right side, connected products, which is basically a power distribution equipment which creates infrastructure for the carrying the current from one place to another place. Second is edge control, is basically monitoring and controlling those infrastructure. And third is enterprise software, which is used basically for analytics. We see in the first 2 vertical is quite positive considering those funding what is coming from IPDS, Uday or smart city areas. We see good positive traction happening in enterprise software also, which is analytical layer. When it comes to utility, which is almost 45 to 50% of our today's, I will say, the market. Coming to conventional generation, as most of you already know, which is basically coal-based power generation, nothing significant is happening. However, what is happening is basically on the renewable generation space, where government is continuously maintaining the focus, and we do see a good capacity acceleration happening on the solar. And this is where we see a positive traction for our transformer business. Almost 1/3 of our business is contributed through solar with respect to transformer, and we enjoy, I will say, premium over most of our competitors. So that's also good news for us when it comes to renewable, and government is pushing actually power to all through this distributed energy. So we do see a positive in short to medium term for renewable. MMM is basically mine, metals and minerals. So the first one, the steel, if you see, there are investment happening, but it is mostly in a smaller level. Though there are the steel plant coming like JSW, Dolvi or Bellary or some more expansion happening. But that's not, I will say, significant. However, there are OPEX based investment which is happening. So we see still the steel sector may take some more time. Still we see there is a negative in terms of our overall growth pattern, what we would like to see. Cement, we see a positive traction. There are grinding units being pushed by many of the manufacturers to go closer to the actual market to reduce their transportation costs. So these are the areas where we see positive, like in cement plant. We see like Dalmia Cement or Orient Cement, Chetina Cement, Ultratech, Ramco. So we are working on a few of these large opportunities in cement plants. So we do see a positive sentiment and investment coming back in these grinding units and all that for the cement sector. Oil and gas, Euro 6 is a focus area, where obviously the reduction in sulfur is a focus area. And there are expansion projects coming up to really make sure that they are not behind going for Euro 6 norms. So like HPCL, YJAC or ONGC, IOCL retrofit. So there are projects, but not significant positive, I will say, but yes, it will be moderately positive, the oil and gas. Transport, which is basically includes metro also. So we are working on some of those opportunities like Nagpur or Ahmedabad, Pune, Mumbai. There are expansion projects coming from Mumbai, Delhi and all that, where we already had the install base. Freight corridors, the DMIC, we do see some of the projects are progressing. Few orders got decided also. Few we have also secured. So we do see is moving in positive direction. Buildings, not significant change, I will say. It's a moderate investment in real estate in terms of building is not too much, but we see in hotels, education, healthcare. So these are the area where we do see positive when it comes to building. Data centers, through the IT division, we have been able to make a good connect with many of these e-commerce companies for their data center requirements. The government is also coming with a lot of digital opportunities where they are pushing for the digitization. So we do see opportunities there also. So data center can be another growth area we see in short to medium term. Smart cities, we are executing NRDA Raipur. Phase 1 is coming quite close to completing it. Then we will be in the phase 2. But we do see opportunities, at least 8 to 10 opportunities are moving fast in the pipeline. And after the budget presentation by the government, we do see the enthusiasm around that. So we will remain focused on a smart city. We have allocated separate team working around this, and we are working on some hot opportunities at this point of time on this. Water, we had a positive growth. My colleague Arnav will be presenting the order growth, where water was one of the area where we had a very positive story, I will say. With the Amrut scheme, there has been a lot of push in the water scheme. So overall, I will say moderate, I will say, in terms of market outlook in short to medium term. Next is a very important topic, order to cash, because it's not only to secure the order and convert into a sale, but cash is very important. And we know that we did have a tough time last few quarters in terms of cash, and we did have a challenge of creating these provisions, and that was because of some of the customer really went through very, very bad phase, and we had no other opportunity but to create that, and that is why this specific focus has been brought. We divided our actions into 3 buckets. First is control actions, second was process actions, and third is tools. So under control actions is basically to eliminate customers with bad track record. So not to acquire order where cash security is the issue. So that's the step 1, and this is where we have started scrutinizing all those their credentials, the legal terms and conditions. We are also trying to go through those lists where the customers are already where we had a bad experience. So we are very, very careful in terms of making sure that we really secure good quality orders. Process actions. So after acquisition of order, once we deliver the consignment to the customer, we are making sure that if there are punch point issues or handing over issues to realize retention payment, we are fully engaged, and those actions what we had already identified has been fully launched, and we are almost closer to completion of that. And that is basically tracking the full life cycle of the project to make sure we don't create a challenge where the cash realization becomes an issue. And third is the tools, is basically in complete project life cycle to track how the orders are moving from order to cash, so that the sales team is aware what intervention is required and what kind of support customer requires. So this is basically to reduce the lead time from after the sales is done, the lead time for the cash. So these control actions, process action and tools which we have launched is really helping us to create more robust P&L. And going forward in the medium to longer term, this will definitely be very, very useful for our backlog as well as for our sales. The next one is, this is basically a highlight of the quarter. I just wanted to share with you because this was inaugurated by our Prime Minister, Shri Narendra Modi ji. This is the JNPT container terminal. With this expansion, the capacity has become double, and this is the biggest container handling terminal in India. Now they chose Schneider Electric because of the intelligence which we could bring in the power distribution system, which was required really to make the operation of this terminal efficiently. There are operators involved who wanted that should be possible to operate it remotely, this kind of large container terminal, and this is what we have tried to create. So we have supplied here GIS, AIS, PSS, intelligent electronic devices, which really makes our equipment more smarter to be managed remotely. So this can be the benchmark infrastructure project, which can be very useful for projects like airports, which is there in the right side, what you see is a expansion project, or smart roads like Bharatmala project. So we do see this reference will create good benchmarks in the market, which will be useful for us really to drive the opportunities more towards technology what we offer. Now I will ask my colleague Arnav to take you through the details of our financial results.
Thanks, Prakash. Let's move to slide 7. So as you can see in this page, we had a significantly positive quarter in terms of our operational performance. We strongly improved both in orders. So this slide talks about the orders. If you see compared to the last quarter, we had a 66% growth in orders, which is very significant. And in terms of the similar quarter previous year, we had a 15% growth. So order was very robust in this quarter. So some very good orders, which Prakash was touching upon earlier. Moving on to the next page on sales. Similar story when you look at compared to the quarter 2 to quarter 3, we had a 74% growth in sales. So this quarter we did about 471 crores of sales. Compared to the previous quarter this year, we still had a good quarter than last year also. So we still had about 2% growth in sales, but overall a very strong quarter in terms of sales and order. So let's move on to the next slide. So once we go to slide 9, let's go to the P&L now and see the reflection of these orders and sales in performance. So if you see this 471 crores in sales, which we did with a steady other income, gave us a 479 crore of top line for the quarter. We had a gross margin of about 29%. Other costs remained in control. So reduction in employee cost compared to the corresponding previous quarter of last year. other expenses was lower. As a result, the EBITDA for this quarter was 47 crores. So this was a very significant quarter in terms of the EBITDA. We had a 10% EBITDA to sales. Depreciation remained stable. And so we had almost a 40 crore EBIT, which was 8.4% of sales. Now, Prakash touched upon the order to cash earlier. Now, you can see very early reflections of that in the interest cost. So if you see compared to last year, the interest cost is on a lower trend. And if we continue this focus on cash, we are going to see better results here. So a good performance on cash, which is getting reflected, although we don't have a balance sheet this quarter, but there is a corresponding reflection of that in the balance sheet as well, which you will see in the next quarter. So profit before exceptional items stood at about 29 crores, which is about 6.2% of sales. Having said that, as we were in last March, we had to take some significant provisions last March. So we still, kind of looked into all our risks. And this quarter, some of the residual risks which we were left, we covered it. We have covered it. So with this, I think we have covered the known risks which was there with us till this point of time. And after factoring those exceptional items of about 36 crores, we had a profit after tax of negative 7 crores. So that's been the kind of the quarter for the story. To sum up, a very strong quarter operationally, strong EBITDA, strong EBIT, lower interest costs, coupled with some one-off which we had to take to come to the profit after tax mark. So that's been the number side on the quarter. So we will take a pause here, and I would ask the operator to.
Thanks, Arnav. Before closing, maybe we will come to the Q&A. So maybe operator requested to open for Q&A.
Sure, sir. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Santosh Yelappu from India Nivesh Securities. Please go ahead.
Sir, couple of questions. How do you intend to repay the short-term borrowings that is sitting currently on our balance sheet? First. Second, how long will it take? We'll be using the provisions to write them off in our P&L. Second. And third, what is the cash flow from operations for 9 months of FY18 versus 9 months of FY17?
Okay, Santosh. So let's go one by one. I think although we don't have a balance sheet which we have published this quarter, but overall, if you see, there has been a significant reduction in the borrowings. So just to give you an order of magnitude compared to where we were 6 months back to where we are now, we had almost a 73 crore reduction in the total borrowing amount. And as I said, when we go in March and publish it, you will see a further positive trend there, and probably a higher reflection of that in the interest cost as we go in the coming quarters, because you will have a full quarter effect of that. So that's on the borrowings part of it. Second question on your provisions piece, I think as I said earlier during when I was talking about the P&L, almost all the known risks which we had, on the debtor side, we have now covered. So this was the kind of the residual leg. So we have taken care of that. So really, unless something very untoward happens in the market, we don't expect a significant risk coming on that count. And your third question was on the cash flow. So if you see last 6 months of the year versus the cash in versus the cash out, the business has generated about 103 crores of positive cash in the 6 months period. So which itself is a very strong testimony of the way the cash performance has moved. And as a result of that, as I articulated earlier, we were able to repay 73 crores of loan.
Okay. Sir, as a follow-up, if I may, how do we intend to repay this short-term borrowings sitting on our books as of now? It means, would we have adequate cash flows that would be able to generate to repay off this debt within a year?
Yeah, I think I just answered the question, right? If you just followed the last 6 months, we generated 103 crore positive cash. We have already repaid 73 crores, and that journey will continue.
Okay. Fair enough. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. We'll take the next question from Neerav Basa from Batliwala and Karani Securities. Please go ahead.
Yeah, hi sir. Just wanted to get some idea. As we were undertaking a restructuring exercise in FY18, and the intention was to keep the organization really lean. So can you share a little bit more aspects on the same?
Okay. So that action is on. So we are revisiting all aspects of the organization. So we are trying to kind of see, it's a combination of a restructuring as well as a growth story. So lines where we have market opportunities, we are pushing for growth. So the lines where we don't see, adequate volume at this point of time, because as Prakash kind of indicated to you, we have segments where we are growing, we have segments where the market is not growing. So it's really a segment-to-segment, product-to-product play. There is no one, shirt-size-fits-all approach. So it's a very specific product-to-product approach. So it's a combination of restructuring and a growth story we are going. But some of the lines, yes, the restructuring actions are on, which we intend to complete by March next year.
So, Prakash this side, just to complement what Arnav said, even if you see P&L with moderate growth, the P&L reflects the control on the cost, which is quite significant. So the EBIT level, if you see, is quite significant in terms of last year, same quarter versus this year. And that has come with multiple actions, I will say. One, which we shared, in fact, last time also, we are trying to do a transactionalization where the products or equipment can be standardized to customers' requirement. And that is helping us to make our order-to-cash process very efficient, because we don't have to do several time engineering of it or designing it. So that is one which is we call transactional growth, which is a high profit activity. We are trying to accelerate the growth on that. The systems part we are quite selective, which order to cash process which we talked about, and we are allocating resources in line with what is actually required. And this is what is helping us. So we are quite selective when it is coming to accelerating our growth based on the mix.
Yeah. Sir, my last question would be pertaining to the debt number. So would it be possible for you to share the quantum of debt that you intend to repay in the next financial year?
As of not targeted, I would not like to comment on how much we are targeting, but I will say that trend is set and we are ambitious that the way we are going now, we will going forward follow the same trend.
Yeah.
Thank you very much, sir.
Actual number is, as I said, 73 crore has been already repaid between June to December. So that's what has already happened. You will see a further trend continuing in the next 3 months by the time we close the financial year.
Thank you, sir.
Thank you. The next question is from the line of Sagar Parekh from Deep Finance. Please go ahead.
Yeah, good afternoon, sir. Thank you for taking my question. The first question, what would be the gross and net debt number? You mentioned 73 crores has been repaid, so what is the exact number now?
Right now I don't have available because December balance sheet is not published, but I will update you after the call.
Okay, sure. No problem. What would be your order book position?
Order book position is around 7 to 8 months sales.
Okay. And in terms of rupees crores, would you be able to quantify that?
Around 800 crores.
Okay, sure. And do we give any kind of breakup in terms of systems or products order? Any kind of...
Yeah, as you are aware that we are breaking our order backlog in system, transaction and service.
Right.
So it's transaction and service altogether is combined around 25 to 30% is contributing, and rest is system.
Okay. And any kind of guidance that you give on the top line for next year? Would you like to give?
As of now,
yeah. See, on the we usually don't give a guidance. I think we will. As Prakash kind of give you the segmental breakup, there are positive segments which is there. So obviously, historically, the October to December quarter is always high for us. So you can see a reflection of that. Jan to March will definitely, it will be on a good track. But obviously, it will be comparable to the quarter which we had in the previous year and slightly better. So that's the right way to calibrate Jan to March.
No, so I was talking about FY19, the year as a whole. What kind of top line are we targeting? Would we be having growth as compared to FY18, or FY19 again will be a year of consolidation for us?
See, it will be a year of definitely a selective growth because the economy is expected to pick up for FY19. So we will definitely target to grow in line with the economy is what I can say. But definitely, a higher growth compared to the previous years.
Just to add, Arnav, it's saying, but our main focus is on the bottom line. So although we are targeting to grow, but main focus still will be the bottom line.
So bottom line, would we assume this 10% EBITDA margins that we have done, you mentioned that there are no more, provisions as behind now. So can we assume that reported EBITDA going forward can be 10% levels going forward for the full year?
You will have to calibrate it based on the yearly number. So I think my suggestion would be wait for the March to come, see a full year consolidated number of how the picture is evolving, and particularly the last 2 quarters, rather than doing an extrapolation based on a single quarter, because this was the quarter with the highest volume, and it will always remain that way. That's how our market trend has been. So wait a little more, wait for the March result to come, calibrate with a more normalized volume would be my guidance on this one.
So what is the 9 months normalized EBITDA then?
So just a minute, Vineet will come back to you. So
okay, fine. So
so 9 months, if you see the normalized EBITDA was around 4.5%.
Okay, so possibly we can touch about 5.5 to 6 for the full year. So we can look at similar kind of number for the whole year next year then possibly, or some bit of improvement over there.
I think we already explained that we are targeting for the bottom line, but as of now for calibrating a number I will not recommend. So better you just follow the trend, how it's going, and definitely it will improving, and our ambition is to grow in a positive trend.
It will be good to keep giving you results better than your expectations. So let's keep it that way.
Sure, no problem. And this order book number of 800 crores, would we be targeting, will this number remain more or less similar, like 7 to 8 months range, or,
that's been the usual trend of the business. So maybe in a particular quarter where we have more transaction, this will go down a little. Where we have more system, this goes up a little. So that's usual business mix. But on an average, yes, 6 to 8 months is the average backlog which remains in this business.
Okay, so then basically we will not be able to project the growth trend or visibility just by the order book number, because it will usually remain 7 to 8 months in spite of even let's say that we grow by 15-20% also in one particular year, in a good year, but the order book will still remain the same, 7 to 8 months kind of range.
Correct. But it will be 7 to 8 months of a higher base in that case.
Absolutely. But just that it will remain in the 7 to 8 months kind of range.
Yeah. And the whole endeavor is here to get faster cash. So with what Prakash explained, the whole order to cash process, the endeavor is not just profit. The endeavor is also to see that the whole conversion happens quickly, so that you get a better return on investment.
Working capital kind of are we looking at?
Sagar, I'm sorry to interrupt, but may we request you to come back in queue for follow-up questions? Thank you. We have the next question from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah. Good evening, sir. Good afternoon, sir.
Afternoon.
Yeah, I have some questions, sir. First is, are these write-off over or there are still more to come?
I think I already answered in one of the earlier questions, if you would have followed, that all known risks on the data side we have already covered. So anything more.
Okay, the AGM when we met, the management, like, for you there will be some write-back also. Are there any write-back coming from the write-off? Because nothing has come so far in the quarter.
As we have declared in last quarter, we recovered around 82 million from the budgets only. So as and that will come, we will report.
Yeah.
And we are focused to recover all the provision that we have provided. We are not written off, we are just provide the provisions.
Yeah, so last quarter, to your question, there was about 8 crores which was recovered in the previous quarter.
But no recovery in this quarter or any coming quarters, any sense you can give it to us?
It's true. I think it's premature to say that. We are working on it, but better be positively surprised next quarter when things come.
We are engaged with customers very deeply, and some of those customers are still in a tough situation. So this is where I will say the current scenario is.
And sir,
Viraj, may we request you to come back and give a follow-up? Participants are requested to limit their questions so we can give turn to others. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from Santosh Yelapu from India Nivesh Securities. Please go ahead.
Sir, given that now if, around 50% of our business with the non-discoms, and there is a decline in the collection period, by when we expect to see a collections period going below the 100 days mark to somewhere around 60 to 90 days range at least? How long will it take for that to be seen?
I think you will have to go back to the mix of the business. I think Vinit was articulating to you the mix. Still it's 70% is systems, about 25 to 30% is transaction. So your statement will come true when transaction really becomes 70-80%, which is not going to be the case here. So the expectation has to be calibrated accordingly. Still 70% of the business is systems, and systems carries its own transactional days. Having said that, when you see the balance sheet in next March, you will definitely see a very, very significant improvement in the DSO days. So already, as I articulated earlier, if you do the math, you will yourself know 100 crore positive cash in 6 months has already reduced the DSO significantly, and that trend is going to continue. So wait for March for the balance sheet to come. You will see a very significant reduction in DSOs.
Okay, thank you.
Thank you. The next question is from the line of Manoj Saini from PNY. Please go ahead.
Yeah, could you just give an approximate margin figure for the outstanding order book?
It is more or less in line with the business performance. So I would say there is nothing abnormal there. So it's a healthy order backlog which we carry.
Okay, and secondly, second point is more or less a request than a question. Every quarter you guys mention that, the worst is over, the write-offs are done with, but then the investors get a shock, in terms of write-offs and all. So can the management clearly clarify, that the worst is over and, the write-offs and all are mostly done with and, we can see a bright future going forward?
I think I've already done that few times during this call. So see, it's also driven by the market, and I think when we articulated in last March, there were quite a few external market reasons, including the whole bankruptcy code coming, some of our customers getting declared as bankrupt. So it was not just internal reasons, a large chunk was it external reasons. But
apart from that, actually, if you have heard Prakash's side, what we also said is preventive action, to avoid this situation, order to cash process is specifically launched where we are spending a lot of time in order quality acquisition itself. So we are quite careful in terms of booking the order itself compared to previous period where we were basically getting engaged during the sales. We are now deeply engaged during order itself with the credit team and the finance division doing full health check of this customer to make sure that order when we are booking can be really traded. So that's the difference, I will say, in terms of proactive and preventive action.
Yeah. So having said that, I think it will be important for you guys also to kind of calibrate. See, in a market like India, there will always be some risk, but that risk should be normal operational risk, which is what we expect to go forward. India will never be a country with a zero bad debt, right? So there will be a reasonable amount, but that should get covered in the normal operations. So that's what the endeavor is.
Thank you. The next question is from the line of Jigar Shroff from Financial Research Technologies. Please go ahead.
Sir, I had 3 questions. One is you just mentioned that the rebound strategy is on track and will get over next year. So is it March 18, right? You're saying it's going to get over. That is one. Number 2 is, what will be the impact of increase in, material cost, going ahead with all the commodity inflation around. And number 3, I think somebody did mention about the net debt as of 31st December, sir. Thank you.
Okay. I think the debt question, your third question, I think we have already answered it few times, so I would skip that question. On the rebound strategy, I think this is happening in phases. The rebound one, yes, it is getting over by March. There are some more, improvement actions, more not the restructuring action, but improvement action, basically on some of the products, on the go-to-market, which we are covering as part of rebound 2. So that will continue in 18-19, but that's more towards making the business portfolio more robust. But yes, on the restructuring side, most of the actions are getting over by March. Your second question on the raw material cost, yes, last year we had a year with very adverse forex fluctuations, like the euro to the rupee, there was an adverse forex fluctuation. So that's something which we are constantly keeping a watch and trying to kind of cover the risks as and where we can. So that's a close watch item. Also, the other thing which contributes in the raw material cost is the kind of mix of the products. So that's the other thing which we kind of keep on a very close watch on how we are monitoring the mix of the products. So I would say these are the two factors which impacts the raw material cost. Beyond that, there is the usual quality and value engineering actions which keeps happening in the business.
Thanks.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Sabyasachi Mukherjee from India Nivesh Securities. Please go ahead.
Yeah, hi. Good afternoon, sir. Thank you for taking the question. Regarding the days sales outstanding,
Yeah,
we will see a significant improvement. So I just wanted to understand that, basically Schneider, mostly the sales happens through dealer networks and stockists, where your trade policy, I think, of the competitors also is not more than 45 to 60 days. So I
think you need to understand the portfolio, and I think I have answered this question few times. I'll repeat once more. See, Schneider's dealer network sale is more on the low voltage side, which is not on the perimeter of the listed company. I think here we are talking about the energy and infrastructure business, which is a medium voltage business. And here I think few times we have articulated that the profiling of the business is 70% is systems business, so which doesn't happen through the dealer and distributor. That's more direct end user customer. So I think you need to go a little deeper, when the March balance sheet comes into the profile of the products and analyze it, and I think then you'll be able to have a right calibration of the DSO.
Thank you. We will take the next question from the line of Manish Goyal from Enam Holdings. Please go ahead.
Hello.
Yes, please.
Yeah. Sir, just one question. What we probably observed this quarter is that our costs have been fairly well controlled, and that has really helped us to overcome the higher raw material cost. So is this sustainable, number one, basically in terms of lower other expenses, what we have seen, and how do we see actions on the cost control going forward? Thank you.
Yeah. So I think, Manish, a lot of initiatives is happening on this front. So this quarter, I would say, is a normal reflection of cost, because thankfully we had no abnormal items on the other expenses. So this is more the normal trend of cost. We are, going literally line by line on each of the elements of cost, and this is where I was kind of touching earlier on the restructuring. Right. So what we are doing is, if you see really kind of the profiling of the product by product, we are revisiting this. Wherever we have a good volume, we are spending there. We are trying to do more investments there. Wherever we have a volume challenge, we are questioning the cost more, I would say, with more microscopic lens to see what else we can do. So that's the approach we have been taking here.
Thank you. We have the next question from the line of Neerav Vasa. Please go ahead.
Yeah. Thank you very much for the opportunity, sir. I was just asking about the factory. As I understand, we have consolidated our Noida-based factory. So just wanted to check how do you plan to further work on this factory, and maybe what are the plans of some kind of asset monetization possible, or how do you work on it?
You may be knowing that Noida factory was not very efficient one. It had come through Areva acquisition. That was not a real industrial plot. It was in 3 different floors, so we were not finding it efficient. That is how we had started this integration activity in Chennai. which is already operational and quite efficient. So second is we also have a huge space in Vadodara where some of those activities are being carried out there also. So in terms of industrial footprint for automation, now we have two places. One at Chennai, another at Vadodara, where we do all these IED integrations. So it is quite efficiently operational. We do see digitization is growing, and this is where our Baroda factory will be quite useful for us to enlarge our operations there, because we do a huge number of our intelligent devices for switchgear panels, and that's basically synergic activities. So we are trying to have more capacity built up in Vadodara for this.
Sir, what would be the cost that would be incurring for this reorganizing our manufacturing operations?
It will not be very significant because the bay is still available because we do have capacity available at Vadodara. We do have some of those machines which is available in Chennai, which we can use it at Vadodara for enlarging, because many of those activities are linked with more of engineering activities and integration activities, and it do not require a very big machine. It's more of human skills, I will say, or expertise.
So, sir, now I understand that we have completed restructuring and we are focusing now big time on improvement. So, any major changes in product portfolio or introduction of new products, something which is there on the drawing board or something that you can throw light upon?
Yeah, so I will say our focus has been always, to create a value proposition which really solves customers' issue. And we are going segment by segment where customers are really investing. Take example of a smart city we talked about, and some of those solutions we actually pushed in the port which I shared with you today, the new port. Now this port we are creating really benchmark energy management system, and this is going to be the I will say the reference for other ports. This is where we are spending time, energy. So is rather than the product, I will say it is a solution which we are creating, because we have many products already, and those are all intelligent products. We are creating solutions which solves customers' issues. It can be for, let's say, cement plant, it's a different value proposition. For metro, it is a different value proposition. And for oil and gas, it's a different value proposition. So this is where we are engaging and trying to really accelerate those. Utility is again very special one where we are trying to do all those smart grids. So we are quite engaged, to create edge control and enterprise layers on top of our connected products, which we call philosophically, let's say, EcoStruxure solution. So it's basically EcoStruxure solution is on the layers of hardware we build edge control and enterprise layers, and we create a value proposition which helps customer to solve many of his issues.
Sir, get your point. But what I am able to understand is when you are working with utilities and discoms is that the existing infrastructure is quite aged, because on that doing really high technology work seems to be quite limited. So how do we mitigate this kind of problem that we are facing, especially with utilities?
So utilities, as I shared with you, is almost, let's say, 50%. 50% is on other segments. So in utility also 50% market, what we see, even 20% respond positively is good enough for us to give us very good positive growth. And this is where we are targeting to have some of those utilities who are quite positive, and they are spending on the hardware infrastructure layers also, which is basically taking good connected products, let's say secondary distribution, as well as transformers and primary distribution. So there are, I will say, several tenders around that, so which is I will say quite positive. And many of these utilities are quite aggressive on this, because that's the only way they can make it their utility more viable.
Sir, can you name some states which are doing really positive work on this utility space? And for the smart city capex, especially in FY19, which cities are you expecting to reach tendering stage?
In utility, I will say many utilities like even the Bangalore, Odisha, Gujarat, Bihar, Haryana. In fact, we just got a good order from Gurgaon. So many of these state utilities are quite positive, and they are coming with secondary distribution improvement project. Mm-hmm. And on smart city space, there are states, 7-8 states where we see positive traction happening. I will not name right now because we are working on those projects quite closely with the city administration, and once we cross that phase, it will be better that I share with you. For competition point of view, it is important to maintain secrecy of those opportunities.
Thank you very much, sir.
Thank you. The next question is from the line of Sabyasachi Mukherjee from India Nivesh Securities. Please go ahead.
Yeah, hi. Actually, I had a few more questions. Your other income is around 87 million for this quarter. Can you give us a split of that?
Yeah, it's a combination of the regular things like some duty drawbacks and some of the other miscellaneous scrap incomes and other things. So as you see, quarter on quarter compared to that October to December quarter, it's a similar line. So that's the usual trend. Nothing abnormal there.
And so you expect this figure to be, come into the next quarter as well?
This is the usual figure. I don't see, that's the usual trend of income which continues. Unless you have something big which we will report in exceptional, like a recovery or something.
Okay. And one last question, sir. You spoke about the several cost control measures that you are undertaking. We see that, in this quarter, the employee costs have gone down. So any major things you are doing there?
I think we also already touched upon some of the restructurings which is happening, and I think that effect is continuing. Vinit, would you like to add something?
Yeah, so if you remember, last year we hadn't done certain restructuring activities, so this is the outcome of that last year restructuring. So we are getting the phase-wise benefit of that activity.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. We will take the next question from the line of Piramal Matani, individual investor. Please go ahead.
Good evening, sir.
Yeah, good evening.
Yeah, so this is regarding to your order book. Do we expect the same run rate happening for quarter-on-quarter basis?
Yes, the order book run rate is going to be steady. As we said, at any point of time, our backlog is between the 7 to 8 months kind of a sales run rate. So that's expected to continue.
And sir, sorry to reiterate the question again. It's been almost, I think, 4 to 5 years in terms of since you took over Areva business in India, in the listed space. And, a concall after concall, you've been saying the provisioning ratio will come more to an end. Is this like are we at the tail end of that, or are there any unknowns yet in the going ahead from your side?
I think I have answered this question a few times during this call, but so it's okay one more time. I think if you see, as I said, what all known risks which we had at this point of time, we have covered on the debt side. So don't expect anything significant. Having said that, as I was articulating earlier also, that in a market like India, there will never be a kind of a zero risk. There will be some normal operational risk, which we will cover through normal operational performance. So one-offs, I don't expect anything significant now going forward.
Thank you very much. That was the last question. I now hand the conference over to the management for their closing comments.
So thank you very much. Before closing, I would like to say the market sentiments look to be moderately positive, and considering the digitization and digitalization drives, we will like to assure you that we will remain focused to secure moderate growth in line with the market for our listed entity. However, considering the short-term challenges what we have been seeing, this will remain, and for that we will remain focused through our order to cash process. We are closely watching the development of the market to bring more changes which should happen at the ground level, and that should support our growth really from order to cash. Thanks once again for your valuable time to understand our company, and have a nice evening.
Thank you very much. Ladies